Well, it's definitely been a stock picker's market and something we've talked a lot about on the channel. As you all know, I leaned more towards an equal weighted S&P or an equal weighted index, kind of limiting your exposure to these bloated PE ratios on the top 10 or 12 names that have really been carrying the market. And I thought there was a tremendous amount of value in some of more of these deep value type names that have been left for dead, with the NASDAQ really leading this drawdown. But it's not just the NASDAQ, it's one specific name that's got everybody scared, and that's going to be Google, trading at a reasonable valuation. Now, I'm not saying this stock is cheap by any means, but when we look at the growth perspectives with this company, the AI capabilities, dominates in search engine and dominates in a lot of other areas as well. Well-diversified business. Apple could be up against it here because the valuation on Google is pretty solid, and they are still growing at a higher rate than Apple. They trade for a lesser premium, and they did beat on top and bottom line, but it was the cloud business that concerned investors here. So while Alphabet had its worst day in over a year, we could see that it is the cloud revenue that is scaring investors right now. But yesterday was Verizon's best day in 15 years. Once again, this is going to show exactly what we've been talking about and why I've been pushing more of your deep value, defensive type names. A company like Verizon comes to mind, and a company like Campbell's Soup. I know these names were left for dead. Nobody's interested in them, but they become more interesting on a day when the market's down a little over 1%. It's been extremely volatile, and you have a company like this that's up 2 to nearly 2.5%, pays over a 3% dividend, and regardless of what the world's doing, we all know we're still going to consume food. And so these names were definitely left for dead, and not names that I normally recognize or normally try to invest in, but they were names that to me had tremendous value and still have growth opportunities going forward. Some of the acquisitions that like a Smucker's made or Campbell's Soup, these companies are trading for 10, 12, 13 times earnings, and they do have growth prospects going into 25 and 26. With that being said, with this sell-off, Google does become one of the more interesting Megatech names to start diving into. We'll do an updated price target on Google here really soon. So if you're interested in buying Google and you want my take on it, make sure you hit that bell, like, and subscribe. The other name to watch definitely for earnings and cloud growth is going to be Amazon. This one is selling off with Google. And so are we in a new regime right now where value is now starting to be more important? And these big Megatech bloated valuations are starting to cool off here. We're definitely starting to see an interesting shift here. But there's still some names that can actually turn this around, and Amazon and Apple are probably going to be two of your larger names that still have the ability to right this ship. So I'm not saying we're in trouble yet, but we're holding on to critical levels when we look at the S&P 500, getting below 4,200. Now, we did a technical breakdown on the S&P and said if we can maintain above 4,150 and show a bottoming process, we get oversold from a technical basis. There's still a tremendous amount of money on the sidelines to really cause a Santa Claus rally here, but we're starting to get to some interesting levels where I think sentiment could shift and people are just not going to want to own anything, and we're going to see capitulation here. So we're really in a crosshair right now from a technical standpoint, from a fundamental standpoint. Not quite oversold yet on the longer term charts. We're definitely getting oversold on the shorter term charts, and holding on to 4,200 was really important, but I always give some cushion here, and that's why I said 4,150 to 4,200, and we're right in the middle of that, sitting at around 4,180. And you guys can see exactly where I'm talking about. This yellow line here is a big resistance point that was broken, and once a resistance point is broken, that does become support, and we are right on a key area of support in my personal opinion. And today's close is going to be really important setting up for earnings for tomorrow, because I still believe that there is more downside risk here when we look on the 1 year chart and the 3 year chart. It's up 9. The VIX is up almost 10% today, and where I think the washout comes is when the VIX breaks above 30 to 35. Usually means that the investor is just giving up. They're throwing in the towel. We get tremendous amounts of selling pressure. We start getting really great opportunities and price disconnects. And we really haven't had that washout yet. And I don't believe it's truly coming quite yet. I still believe we have opportunities for end of year rally. I still believe earnings are remaining strong and the consumer is still hanging in there. And there's still a lot of liquidity on the sidelines. So the setup to me is still a possible rally end of year. That doesn't mean that I can't be wrong here. But if we start seeing the VIX break above that 30, the washout might be coming sooner than later. And we actually might be pricing in recession. And the market's telling us this, but we won't even know until we're out of the recession that a recession even happened. But markets don't usually bottom until we get a confirmed recession. So a lot of things to think about here. Obviously, the value play is still working when we look at some of your companies that have defensive earnings, that pay dividends, clean balance sheets. And companies that we absolutely need on a daily basis are still working even though the market is selling off. This is why it's been a stock pickers market. That's where we've been really working on the channel. If you're new to the channel and you've been seeing some of the videos I've been posting, they're definitely more boring type stocks. But I'll tell you a stock that is getting interesting here, and I brought it up once before on the channel, and that's going to be Gen Digital. This one's an interesting cybersecurity company. I think the valuation is really reasonable when we look at cybersecurity, how much it's needed, the path of growth, and the total addressable market that keeps expanding with cybersecurity. Trading at 7 times earnings, pays nearly a 3% dividend. Now they do have total debt exploding, and that was an acquisition that they recently had. So we have to see this acquisition start paying off. So I'd say the balance sheet's not perfect, valuation is appropriate, and they do have the ability to grow here. And so when we look at some of the brands that they have underneath their umbrella, we can see here Norton, Avast, LifeLock, and we're all familiar with these names dealing with cybersecurity and identity theft. So they definitely are in a field where it's growing. They're kind of getting overlooked here when we think about more of your commercial type names, whether that be Palantir, Fortinet, but a company like this definitely deals more with small businesses and consumers. And it's kind of getting overlooked when we look at the total addressable market that's shifting here. More and more people bank on their phone, more and more people bank on their computers. And so the heavy reliance on technology, we definitely need companies like this. And I do believe that there is going to be a growth opportunity for this company. So this is definitely one I've been interested on. I've covered it on the channel, and now it's starting to reapproach some interesting levels right around that $14, $15 mark, I believe is where I had earmarked, but that might be another one we'll break into here really soon. And it's currently trading at $16 a share, trading at a $10 billion market cap. It does anywhere between 800 to 700 million of free cash flow. So interesting name here that I think is kind of getting overlooked overall. And to me, at the right price, this definitely falls into that deep value kind of defensive name that I think doesn't have a tremendous amount of downside risk. But as always, guys, just to kind of recap here, defensive names are working. Amazon and Apple are really going to be what could make or break our technical levels here. And the next time we get together, we're going to look into Google overall and get a fair market value for them, trying to annualize out about a 12% compounded rate of return. So the prices you guys see me come up with, you have to remember that I'm looking for a double-digit compounded rate of return to buy certain stock prices at. So it might be well below where it's trading at, but that's because I need to build that safety in order to get a rate of return that I'm looking for. As always, guys, really appreciate your time. Thank you so much for tuning in. We will see you in the next one.